All right, man. We are live. This is I wouldn't say this is our inaugural show together. This is more of like issue zero out of like, have a mini series or ongoing or whatnot. But uh myself, Ferd Bert the Nerd, or FBTN for short, and my good friend Southpaw Brad, the real estate extraordinaire over on the east part of the country. We've been talking for a very long, I'd say like a couple months. This seems like a long time, about starting a show together, about kind of I would say our passions and kind of our expertise. And other than the comic book world, definitely brought us together as like colleagues and friends, whatever you want to call it. Um, but I think it's with today's kind of possible contagion and worries and all the crazy news you see on Twitter, on YouTube, on CNBC, or whatever broadcasting channel you watch, I kind of wanted to get into just the reality of what's going on in the banking sector with your money, with your real estate wishes and curiosities. And so that's what we're doing today. And we're kind of doing kind of a test run on my channel, but we will eventually start our own channel and grow it from there. And anyway, so I asked Brad kind of like an hour and a half ago, just like, hey, let's just try this out. I hope you're don't have too busy of a day. I'll get some slides together, whip it out, let the community know. And he was like, sure, let's do it. So yeah, man, really happy you're going doing this with us or with me today. And you said that your professional like work is actually been pretty busy, whereas you would think with all the headlines of the news it'd be pretty slow, but it sounds like you're pretty busy. Is that right?
Yeah, so traditionally this time of year is busy. I've the last 2 weeks I took 2 listings, Northeast Columbia area, and got a couple working on a couple more, and it traditionally a busy time of year, and it's been interesting to see the information that you're providing and
Oh, good.
apply that to what's going on. And I think there's obviously we've talked about it. There's
Right.
some reason to to have questions. I don't know if I would, some people are concerned by news that they hear, and so our idea was just to provide a source for explaining explaining what's going on and going in depth with it, and then maybe even offer a glimmer of hope for for things. And it's not potentially not as bleak as we may hear all the time. So it's just a matter of putting yourself in a position and surrounding yourself with people who know their stuff. And so that's where, if I'm sure, whoever sees this has been seeing your daily updates and market updates, and it's like super informative. It's
Good.
really good. I mean, it's stuff that I look forward to those every day, because I deal specifically, and we were talking backstage about this, I deal specifically in what I know. So I entrust, other people that I work with to provide knowledge in what they know. So you've been a really good source for that.
Well, great. I really do. That really just actually make me happy. In regards to just like it's all about information. I never like to try and tell people like do this or that or like buy this or like sell this. And like I never wanted to be that person. And I've always felt that I've always wanted to be around people that have that kind of same attitude. And yeah, just talking with you and just kind of and I know like a lot about the Western or West Coast kind of market in general. I'm in Washington. I know a lot of people know that. And I just put our Instagram there in the chat there. If you guys could follow our Instagram, we're trying to grow that and just kind of pivot away a little bit from comic books and collectibles and just kind of seeing like and be more informative and like help people with like, how to save their money, preserve kind of these uncharted times. But yeah, just always wanted to just inform people of what's going on and like kind of, I know there's a lot of like oh, can I buy a house? Or how much does a house cost in, South Carolina? Or I've always wanted to use the equity in my home to like help build an accessory dwelling unit in my primary home. How do I go about doing that? Or is that even possible? Um, I think the biggest question we always get is like, I don't even know if I can qualify for a home, or like I don't have a down payment, or I I don't think I could get a job in an area like South Carolina where I would love to go, or what's the employment look like there, and how do you go? Do you contact a realtor first, or do you contact a mortgage guy first? Do you go to a bank? Do you go to, or do you go to a mortgage broker? And all of those questions could be yes. You know what I mean? And not everything you see on social media, including here, is always right. It's always different for every person. Um, it's just like I prefer reading Marvel issues. And Brad, I don't know exactly what your cup of tea is, if you prefer DC over Marvel or an
I'm
independent
a
book.
Marvel guy primarily. Yeah.
Okay.
I'm
Yeah.
getting
So
into I've gotten into DC more the last probably the last 6 months or so than I ever have.
Oh, okay, that's good.
Yeah,
And Bronze Age nerd, some YouTube royalty in the house
for
today.
sure. Yeah.
Yeah. So today, obviously it's not a comic book related show so much. I may do a giveaway later if we do have any comic book guys in the chat, but yeah, just not if you're looking for comics today, you probably don't want to be in this kind of interesting little topic we're talking about today. But
Well, it's
yeah,
something
get
that everybody, regardless of what you
mhm,
collect,
yeah.
this hits close to home for everybody. Comics is the thing that helps us shift our focus away from the troubles of the world.
Yeah.
And so this is like this is still something I think that hits close to home. And when you were mentioning, do I do this or this or this, those questions that people ask, um, it causes you to freeze because you don't want to make the wrong decision, so you just don't make a decision.
Mhm.
And I think that's kind of the reason I wanted to do this, as we were talking about this over the last couple of months, is be a source of information for the people that you work with and you deal with.
Mhm.
And so hopefully this will help people make an educated decision about what they need to do and what direction to go.
Mhm.
um, so that's one of the major reasons. Well, I couldn't, even though you told me on short notice, I couldn't say no. I had to join in. So
No,
yeah,
yeah, I appreciate it. If you would have said no, I probably wouldn't have done it. So I'm glad you're here. And I think also too, like, it all flows, right? So like, obviously the ideal situation is to own your home. Once you get in your home a little bit, you get some equity, and then you buy a car perhaps, and then on the side you still buy comic books here and there, or like collectibles, whatever you would have you. But having this knowledge too is going to affect the way that you have, exponential income. And maybe don't buy that FOMO book or that random, you know, uh, collectible out there that goes for like too much money. And, I think also this will help people's like money decisions as well, and discretionary income and all that stuff. So, which I hope it does. And, I buy scratch offs for my aggressive investment portfolio. Hey man, AOA, if you got the scratch to do it, no pun intended, definitely go for it. They can be fun. So, um, but yeah, so getting into kind of the slides today, this is going to be a pretty quick show. Um, I just wanted to kind of maybe bring out like kind of the bad news first, and you know rub off that band-aid fairly quickly, but just kind of realize like, okay, like the stock market is always projecting future type stuff, right? And it may not be today, but it's always going to be projecting. I just said that twice, but so that's just kind of like the reason why I talked about or brought this show up today is there's there's some contagion. Let's be honest. There's a little bit of contagion in the banking sector. I think there was a little bit of a canary out of the coal mine with SVB, Silicon Valley Bank. That's what it stands for. Essentially failing. Um, and I'll kind of go into the reasons that in the slides a little bit later. But kind of the current news as of right now is it's not very good. it's there's been a lot of tumultuous things going on right now. It's bad. It's not a good look on kind of the overall picture right now for, I guess, overall tone of what's going to happen to my money, basically, with a lot of people. Um, the I guess the one thing. Oh, and Wade, we will be getting into First Republic in a little bit. Yes, Blade Builder, Mike, finances and real estate and comics, man. It's all related. It really is. I mean, in a way, it can be. Um, yeah, I mean, it's there's a lot of bad things and things to look out for. I know I got a call yesterday from a friend. He was asking me like, "Oh, should I buy up these like bank stocks?" And I go, "Absolutely not." I mean, there's too much uncertainty unless you can, even if you can write it out, the company could go to zero, potentially. And but it's like, why are these banks going down? I mean, like, I have, like, my friend, he had a job, he works for a pretty big tech company here in Seattle, and he's contracted for the next 2 years, that kind of thing. Mariner games are selling out over here, so it seems like people are spending money. But so why are all these regional banks going down? And we'll kind of take a look into that. I'm not a huge expert in mark to market securities and all that, but we'll see. Has anyone heard of this new thing rolling out in July called Fed Now? I have not. But if you have a link in the chat, definitely like let us know. That's I'm always up for that. But Brad, I know, like, so SVP is regional. It's based in California. There's First Republic, which is also, I believe, based in California. I don't know if Wade, you can confirm that. Have you guys in the East Coast, or I guess specifically in your region, has the contagion spread from the West Coast over to the East Coast?
I haven't seen any like hyper local
Mhm.
effects to that news. I think it's more of just a general fear when you hear what's happening. It's more of just a general, concern, and you lump that in with all the other all the other news that trickles out, and it just creates like a general fear. But I haven't seen any like local heard anything locally that might that might affect us on this scale.
Okay. How about your clients? Do they ever bring it up to you? And I'm curious because, like, I'm on the mortgage side, right? And you're on the, like, buying side. So, like, do your clients even, like, care? What's their tone?
There, I haven't had anyone ask me about it, about the security side of it. It's I think having so the lenders, I usually have a couple of
Yeah.
lenders that I work with,
Mhm.
and when I connect them to my clients, they're taking care of them, and really have and I haven't had any feedback from them of any of my clients asking about, hey, are we in for a, so I think having an educated source who can answer questions, and I think here it kind of feels like something that's happening somewhere else,
Oh,
almost, if that makes sense.
that does make perfect sense. And like one company I was thinking of, Key Corp, they're based in Ohio. That's like their headquarters. But we have Key Corp, like, it has a pretty big presence here in Washington. And so it's headquartered in the Midwest, but it's here in Washington. And it was, my Key Corp, quote unquote, like, colleagues. I don't have a lot, but, like, I wondered how they were doing and stuff, and they seem okay. It's not like it's kind of hard to understand, like, are there bank runs going on? Because you just go on your phone, right? And you pull your money out and you transfer it over to whatever, and then you go to ATM. That could be like at a gas station, for God's sakes. So you're not really seeing like a bank run of people going to the bank and pulling their money out. It's all digital, right? So um but the crazy thing is, I was watching CNBC about this. They were talking about how the news can spread like wildfire because of social media. You know what I mean? So uh, on the show tomorrow on OTR, we're gonna talk a little bit about how a meme coin has kind of taken over the current state of like, and so how social media has kind of gone has spread that company as well. So um, Anyway, yeah, so that's interesting to know that you guys aren't really seeing it, which is good, for your consumers, right? But yeah, so some current news as of today. So JP Morgan, big bank, everybody knows JP Morgan, I would assume, has taken over First Republic. And the general consensus after, from what I saw on the street and just kind of, in circles, I'm not part of like any like inner circle or whatever, but the initial kind of reaction from people was like, oh, this is good. This is like, okay, a big bank is taking over, kind of like in 2008, 2009. A big bank's taking over a smaller one and kind of, I guess, resetting the contagion with that company or whatever, and with the clients. But after the market closed, I think yesterday or a day ago, regional bank stocks just started to tank. And from what I researched and what I read and just kind of what I found was, so I don't know if anyone knows in the chat or just whoever's watching this, but essentially, usually what happens is when a company takes over a company, another company takes over a company, there's usually like a agreed upon price. It's either we're gonna pay, this company's worth like 300 million or whatever, we'll pay 600 for it because we value it at $1 billion in 5 years. Or in this case, they look at your assets, they look at all the documentation, they're like, yeah, this company is worth 20 cents on the dollar, we'll pay 30 cents for it. So from what I read, and don't quote me on this, is all just kind of like just research I did, but from the research, JP Morgan paid 85 cents on the dollar for this, for First Republic, basically. So they took the mark to market security value and paid 85 cents on the dollar. Why that's kind of a big deal is I feel like investors assumed that JP Morgan was going to get First Republic for like 30 cents on the dollar, kind of how Walmart got taken over by JP Morgan. But they pay, I think investors figure they paid too much for this First Republic Bank, and that this isn't the last of the takeovers, basically. What that does for depositors now, right now, the FDIC is insured up to 250,000. I'm sure you know that. So basically, what that means is, if you have 250,000 in your account at like First Republic or whatever company that goes under, you get 250 grand from the FDIC in guaranteed funds. If you have anything over that, then the amount over does not get insured. You basically lose out on that amount. Now the Fed, the Treasury, has kind of backstopped that and kind of guaranteed funds. But as of right now, that's kind of where it stands. And so, kind of piggybacking on that again, if the assumption is that investors thought JP Morgan paid too much for this First Republic company, one, there's going to be other banks that are going to go for sale, and two, they're going to go for lower. And so that's one of the reasons I think we saw a pretty big red dip in regional bank stocks today. Does this freak you out at all a little bit, or is it kind of like, well, I guess we'll just kind of wait and see?
It is scary, sure. My initial thought would be, I guess, exactly what what you were saying, that a large bank stepping in would at least give the perception of security and like prop it up. But it seems like, I mean, going back to your daily updates, it seems like I mean, it's a roller coaster. It's been a roller coaster since you've been doing those. I mean, it's all over the place. And one day it might be down, and the next day it's up 400 points, and then it's all over the place. So I think it's just important to have a source that's got their finger on the pulse of what's going on, just to kind of monitor and keep an eye on it. But yeah, it's scary. But the market, I mean, are they just I mean, it's speculative at this point. I mean, is that how the market's reacting?
And Jizzy, JP came out of champ on that deal. Yeah, and to answer your question, Brad, um, I don't know. I don't think it's over, and I think that's what freaked out the market today. And the other thing too, Wade. I mean, I think JP. They did their due diligence. They're a great company. They bailed out a couple banks here in Seattle back in the day and took them over at 20 cents on the dollar. It was pretty crazy, but um, I think one other show I watched today, they kind of said as well, like JP Morgan can't be the only company that's taking these banks over. There has to be other, like Goldman Sachs needs to come out and help out, like kind of the contagion as well. And a lot of I'll get in it'll go into we'll go into slides later down the road, but it's it's I don't think it's over, and I think that's kind of the issue right now, is because people don't know. And we got some news out of today after the market closed. I don't know if this is my next one, but yeah, PacWest. It's another regional bank. What's up, Richie? Popcorn culture's in the house. Do you guys feel that reporting on this trying to stoke fear among the population? I don't think it's all about clickbait, right? I mean, I'll be honest. Like, I want to talk about this because I wanted people to. I wanted, because it was the biggest, like, kind of headline today was the fear that regional banks are going down. Um, Brad, you kind of confirmed. You actually helped me kind of settle down on the, like, contagion, because if you're in your area, you're not really feeling the heat, or you're just kind of like, oh, that just seems like kind of like a regional thing. um, to me, it sounds like the banks in your area have very good risk management, which the regional banks that and what's confusing is, like, when the big networks say, like, regional banks, like, there's regional banks in South Carolina, there's regional banks in Idaho, there's regional banks all over the country. So it may kind of make you feel that every region, quote unquote, is national, right?
Right.
It's very confusing. But a lot of these banks, and I'm not trying to single out a state here, but the ones, it's just fact. They've all been in California so far, and it's been Silicon, like, in that kind of region, which they benefited really big from the pandemic and from the past few years. They're very tech heavy. Those companies are deposited a lot of money in those regional banks because they wanted a relationship with those banks, and the banks were like, shoot, we'll take the money, like, why not, and why wouldn't they, right? The way they risk managed it was their problem. um PacWest was looking to sell today, and that was kind of another, like, where the heck did this come from? And I mean, this stock dropped 40% after hours on half a day's volume, which is unheard of. Typically, like, after hours market, after, like, any type of news, you're not trading at half the day's volume. That's a lot of shares changing hands. Um, and the stock's, I think, at like 250 a share, like maybe $3. I'll just say that. And um, if this is the next domino to fall, it's gonna obviously, it's just gonna it's not gonna stop. Um, if PacWest is looking to sell, like, who's gonna buy them is one question, and for how much? Because, like, it's like, when a NFL team's like, oh, we want to trade this guy or cut him. It's like, you have no leverage. You know what I mean? Um, and for them to announce that, like, right at after hours, that I thought, which is kind of that's a tough pill to swallow. You know what I mean? So, um, yeah. And the crazy thing I was kind of alluding to earlier, like, the deposits, are they going out? I don't know. I'm pretty sure their mark to market securities are essentially going down in value, and that's what was really hurting these regional banks, is because they can't keep up with the cost of deposits, which I'll kind of go into a slide a little bit later. So, um, that was kind of the big news after hours today. Did you hear about this after the market closed at all?
I did not. In fact, when we were going over these right before the show,
Oh, that's right. Sorry.
that was the first I had heard of it. So
um, yeah. So, and it's probably, again, because it's regional, right? It's on the West Coast. I, Richie says, I love what's happening because our deep recession is getting closer and closer. Equals stimulus equals Feds will drop indexes to zero. Lots of loans. I will be closing money. Okay. I got you. Sorry, I was like reading that kind of off that. And then AOA says JP Slime Morgan acted like they were angels by buying all the assets. Yeah. Kind of tough. So kind of piggybacking on the regional banks are red. It's scary. And kind of what I was saying earlier, like, do you buy here? I don't know. And again, we're not a recommendation show. I'm not saying to buy or to sell or to short. Like, never want to say that. But yeah, exactly. Brad, like, I don't know how much you dabble into like investing in companies or whatnot, but like, does this make you want to buy a company that's like a bank, a regional bank in California at like $2.50 a share? Would you want to get in on that? Just out of curiosity.
I don't think so.
Mm-hmm.
I don't think so. Just because, like you just said, I mean, it doesn't appear to be the end. It doesn't, it's just the next domino to fall. So
Mm-hmm.
where it's going to go, it just seems way too volatile. This is much more your area of expertise, but yeah, I would be concerned about it at this point.
Yeah, and I would also agree with you there. I wouldn't touch banks with, just me personally. I don't have that risk aversion with it. It reminds me a little bit about and Richie kind of hit on it there. I remember back in 2008, WAMU, they're not around anymore. A lot of people are trying to buy them at like $3 a share, thinking like, oh my gosh, this is like a $20 stock like 3 months ago. Um, I'm gonna hit it big because they're gonna get acquired by JP Morgan or whatever, and I'll sell it at 8. Well, they didn't think about that. They didn't think about, I'll use a football analogy or a sports analogy, that the player was gonna get released and they didn't get traded or traded or signed by another team. They were released, which in definitions of what we're talking about today is they went bankrupt, and that $3 investment that they bought 100 shares of went to zero because bondholders get paid first, not stockholders. It's not as reminiscent, and I'll say why later with the little like breadcrumbs later down the show. But it definitely does have like kind of like those like like kind of situations going on. But I wouldn't either. Some irony today too. After we'll talk about in the next slide. But so why are the banks losing money? A lot of people are just be like, oh, is it just because are they not doing business? That's one situation. But why are they dropping so fast, so quickly, right? So you could use the easy kind of like, well, the banks got too big, they overhired, and now they're not making any loans, and interest rates are too high. Well, usually, when rates are high, banks make money because they can charge interest on that unsecured debt, that type of thing. In 2020, 2021, 2022, I could not keep the phone down. My phone just did not stop ringing. I'm sure that yours did the same. You probably had some of your best years back then, and you wish you could do that every year, but you kind of knew that it was going to last. But man, it was fun while it lasted. Am I right?
It was fun. Yes.
Now here, like when the pandemic hit, like a lot of people were working remote, and they were buying houses. Like, someone had a Seattle salary and buying in like Arizona or Idaho. What was kind of like the real estate market in relation to like what you were seeing?
When COVID hit, is it?
Yeah.
So I decided to double down basically. So when everybody left my office, I was still going in, and I decided to double down and really just start getting on the phone and having conversations with people.
Cool.
So I had a good many people who bought during that time frame. In fact, I've got a couple of 2-year anniversaries coming up this month for
Mm-hmm.
some folks who were yeah, we had to shift gears on how we did things.
Mm-hmm.
There was a lot of, make sure all the multiple listing service descriptions had, you have to wear a mask in the house, and don't touch anything, you don't, use hand sanitizer and all
Yeah,
that stuff. but
sure.
but we were going and seeing houses in person and doing that stuff. And really little did they know that they were jumping in when so many people had decided to wait. And they avoided competition at that point, and actually did pretty well for their, and built some equity during that time. So yeah, it I doubled down, and the folks that I was working with did pretty well during that time frame.
Yeah, I mean, it was at first like a period of like 2 weeks where there was all this uncertainty, and the market started to go down. We were seeing S&P 500 24, or S&P 500 at 2400. I can't even remember what the 10-year was at that point, but it was insane. And then people were like, "Well, shoot, I can still work. I'm still employed. My rate's at 4.5%, and I bought 6 months ago. I'm gonna refi at 2.75%." And that's when it just we were doing like 160-day locks on refis, just because we had so much volume, and our secondary marketing team was just like, yeah, pay for it, extend it, whatever, no big deal. um and then you just saw this increase of just people. We had clients that were looking in Seattle, that were looking in Bellingham, which is north of us, and they were looking on the east side, which is about half the price of a house on the east of the mountains, that kind of thing. It was a crazy time. So last year, where we saw a peak in comic books, I would say the peak kind of ended. I always think of, for the comic book people in the room, which is probably 90% of you, I always think of Acetate Gate as like the ultimate like canary out of the coal mine, saying stop specking on stuff. Like, it's just going to be hard from this point on. That was kind of like the slowdown of loans for us too. And SVB, I'm going to use them as an example. So a lot of people are like, man, this stock was at like triple digits like in December. What the heck did they do? And a lot of it had to do with mismanaged. A lot of it, okay, portion of it had to do with, okay, loan value goes down. So like every loan that a bank does, you get servicing income from that. You get income from the loan officer. You get income from the investor. They pay you a percentage, and that margin is how you make money. Well, if you're a volume type bank, so like for example, a mortgage broker that you work for, or that you work in tandem with, um, they're making a margin because they want to buy a certain market. They either want to buy jumbo, or they want to own like down payment assistance, whatever. And so depending on what their strategy is to make money, whether it's volume or like just perfect loans that are like a million plus or whatever, that's how they make their money. So that was one reason why all these banks have kind of like tanked or just slowed down, right? And that's okay. It's okay if your bank is well positioned. Well, when the loans started to dry up, and executives or the board or just the revenue guys were like, we need to make money somewhere. We have all this free cash because people aren't, we have all this free cash because people are depositing money into our regional bank. We can't really do like a lot of investment with this because we're a bank. However, we can buy bonds to kind of pad our revenue. So SVB, from what I read and researched, they started what they started to do was they started to buy longer dated bonds, so like your 10, 15, 20-year bonds, in like July of last year, right before the Fed started to raise rates. So the way banks have to value their assets is they have to do a mark to market. So what that means is every time they report quarterly earnings, their securitized assets have to be valued at the current market. Just think of it like what's the current value of your comic book? That's how to value it, right? Well, you can imagine that when the Fed just pumped like the gasoline on, increasing rates, um, those bonds are worth like are just decreasing in value. And if the bonds decrease in value, obviously your cost of assets, so like basically the interest rates that savings people with savings or the mark to market securities, they're gonna hit they're gonna hit your income. and and then on top of that, SVB is like, shoot, we're not leveraged enough, or we don't have enough deposits to coincide with the FDIC. So that's why they needed 5 billion of an infusion to kind of keep them afloat. Um, and that was essentially, from what I read, the the shutdown of SVB is like they basically just got too greedy. They were investing in quote unquote securities, bonds. However, they didn't anticipate the rate of those bonds to increase and the value to decrease as well. And that's why we had that shutdown.
Right. That makes
kind of
sense.
kind of too bad. In a nutshell, that's the easiest way I can like kind of explain it. And it really sucks because, like, we were talking about earlier, like unemployment's not high. People are still spending money through this quarter. And I know there's at our bank, at least, I don't want to say our bank, our banks in general, I haven't heard of like loan loss reserves having to go up. So basically, like, people saying like, I can't afford my house anymore. It's 30 days delinquent, 60 days, whatever. That number has not increased to where it's like kind of scary, which is why I feel like I'm okay. Um, but yeah, this is the first time I've ever heard of like, oh my gosh, like a bank is failing because it did not avoid a problem that they totally could have avoided. Just don't, like, why would you take that risk? And I don't know the back dealings of those banks, right? It just comes down to, I guess, corporate greed or maybe stockholder greed. Who knows? Kind of unfortunate. So,
Right.
um,
Thanks for swinging by, Richie.
and James Kreider, he's another other end of the finance spectrum, and I'm really happy you came through, James. And he was saying earlier in the chat that his best years, and for myself and for Brad, were a couple years ago, and we may never see those ever again. James, I'm curious of like, and you were saying that and you were saying, James, that there was some that some of the banks that you work with are pulled out. I wonder if you can say in the chat, like, do you know why? Like, they're just kind of risk averting their portfolio? I don't know how cars are in your area, Southpaw Brad, but I can't get a car. Like, I can get a used car for the same amount as like a new car. How's it looking in your area?
It's leveled off a little bit. My sister just bought well, it's new to her, not brand new, but she just bought a car, but I think she had to drive like a few hours to get it or something, a few hours away to get it, and picked it up. So it was worse a while back. I had my car died on me during the pandemic, and I had to drive. I had a rental for like 3 weeks because I couldn't find a car. But it's leveled off a little bit here now. It's not quite that bad.
Yeah, I don't like cars. Like, I'll drive them to the ground. Like, I'm just not a car guy. I say that and I have like an Audi, but it's like it's older version. But like, I've wanted to get like an SUV because I miss having an SUV, and I just I can't do it. I have too much uncertainty, and maybe this like kind of makes people like feel better about like their financial situation or not. But like, okay, so I work in probably the most, like, right now, like the scariest industry you could think of. I just feel that way. So I'm lean. I'm cutting everything pretty lean. Like, I'm not going out to eat as much. I work from home, so I save a little bit on gas. Definitely not buying any new clothes anytime. I don't need to, so it's fine. I'll mix some water with my shampoo so I can make that extend a couple more weeks, that kind of thing. And I cut a little bit of the cable bill a little bit here and there, and I watch more YouTube than I ever have. And just you gotta have to make cuts, and again, like, I will drive my car into the ground before I get a new one. I'm not a car guy.
I'm the same way. Yeah.
Yeah, man. I'm too old to be driving around in a cool car. So James, thanks again for coming through and kind of supporting us. So most banks have tightened their lending policies, raised their rates, and are advancing less. But last week, one subprime lender shut its doors completely. That's interesting. Okay, so and Citizens Bank closed their auto loan division with less than 24 hours notice. Okay, I'm not trying to freak people out, but that's scary. If you're closing down or shuttering business with like no kind of like update or heads up, that's stuff that you should like look out for in the news just to kind of prepare yourself. I'm not trying to like say like it's 2008 all over again because I honestly don't know. But I hope this channel kind of provides that like just things to look out for and kind of dig into research of like why these banks are failing or how that affects you. Wade, I don't know in Oklahoma, and I obviously Trey's not in the chat, but like I wonder, like, is it affecting you guys, or are you guys just like not affected at all? And that's kind of cool. I think about this channel too is like I'm on the West Coast, you're on the East Coast. We got Midwest people in here, just dropping knowledge in here and all that. Richie's in the mortgage industry as well, so he knows a little bit about. He's probably like, "Oh, Furch just blowing smoke up your ass. You guys don't get a loan with him. Hit me up, that kind of thing." But yeah, so it's really interesting perspectives and stuff. So anyway,
well, you can really get stuck in your bubble if
sure.
you don't have these, create these conversations and give, the chat's been great. Give, them an opportunity to share and kind of let us know what's going on where they are.
Yeah. I'm curious, like what the chat, like, what are you guys scared of? Like or do you guys even care? Or, not to go political, but like I'm talking about the Fed here, and a lot of blame has been on the Fed for one, not raising rates soon enough, and then two, raising them way too quickly. And I don't know how I feel about one thing or the other. I know in 2019 we kind of planned for a brace of the market slowing down and kind of like an ease of rates going up again, and we just kind of prepared, kind of what we're doing now a little bit. But I feel that with COVID and that 2 years of uncertainty, and it's kind of like you're damned if you do, damned if you don't, right? I feel like they should have started raising rates in 2021. Honestly, like November 2021, just start gradually doing it. Like 75 basis point hit is just tough. I mean, like, I don't care if you work at Microsoft, Apple, like that's a lot of money. It's all relative, right? And I don't know. It's I think the one thing they messed up on was definitely they waited too long. And whether you want to blame COVID or not, I mean, these guys are supposed to be the smartest mind. Like, you could argue the Fed is probably top 5 most powerful person in the world. I'm going to go on a limb and say that because he controls the money supply of the most demand currency in the world. I mean, just say it. I mean, that's not a political thing. I mean, like, I can go to the Philippines, and if I got $100, I can use it. But if you have pesos from the Philippines, use it here. There's no way. There's no freaking way. And I mean, I hope I don't get canceled for this, but like, whenever I watch like a drug money show, they're not trading money in like won. They're trading in like greenbacks. And that's in Colombia or like whatever country it is. Whatever. And just Wade just answer my question. I'm scared I'm not going to be able to get rid of all the UVC. What's that? I don't know what is UVC. Do you know what that is?
It's probably a joke. I'm going to assume it's a joke.
It probably is a joke. But...
all of his comments, I'm just going to assume it's a joke.
And hated Kuru, thanks for coming through. I was going to spend the day out with family Sunday, but now you convinced me to spend the whole day liquidating as many comics while I can. Don't panic, everybody. But yeah, you probably should.
And I was right.
Okay, well, we're not going to highlight that one, Wade. You can do whatever you want. And yeah, man. So like, I like your perspective too, because obviously, like, you deal in asset sales, right? That in in the word, right? Do your clients even know who the Fed is? And I'm not trying to say that your clients are dumb or uneducated or whatever, but like reality, like just some people just don't really like. That's not like a concern of theirs.
I would say no. I think their concern is their situation, their immediate situation. So their interaction with me, their interaction with whatever lender they're paired with, and just going through the details of their transaction. I don't know. I don't get the feeling that, or I haven't received any feedback that they think on that broad of a scale, really. I think it's more about like what, their situation. And I think for a lot of my folks, so I've got several of my buyer clients. So both of my listings that I took the last 2 weeks are military families who are relocating to a different base. So, and a lot of my buyer clients are currently renting. So their thought is, it's just better. I would rather pay my own mortgage than pay someone else's mortgage, by renting a house and paying for their investment property. So that's the two groups of people, I guess, I'm working with most right now. But they seem to be more concerned with the specifics of their situation.
And yeah, and so it's like kind of a bubble, right? Like kind of like, I wouldn't say ignorance is bliss, but just like, well, it doesn't affect me in a way that like I don't mind or whatever, right? So that's and I think Brad says, and yeah, I think I come in OTR tomorrow. We're gonna talk about AI for sure. And Wade, this is a great question. This is why I love the chat, and this is why I appreciate you so much. I'm answer that in a second, though. I wanted to highlight it though. At least we'll answer it. Sorry, I keep seeing I. This is a we thing. But yeah, I a lot of my clients, like, so even my current clients, right? Like I had someone call me, and they were like, I have a really good rate, but I need to build an accessory dwelling unit for my mom is going to live with us. And I said, okay. And they want to keep that rate. I'm like, okay, well, how much do you need for it? And they're like, well, I need 150K. I'm like, okay, well, we can look at a HELOC and we'll go through that. And a HELOC is kind of a sophisticated kind of instrument to use, I guess you could say, because it's interest only. It only lasts 10 years and it's variable. Now, hopefully we're at the top of that prime rate cycle, which it sounds like we are. However, at the end of 10 years, people kind of panic or like they don't know what to do with it because the payment goes up. And so I said, well, I know you like your rate of 4.75 FHA, but even if you take cash out at a higher rate, your monthly payment's only going to go up by $150, and you're going to have an accessory dwelling unit on your home anyway.
And where else can you use that? I mean, you're also we talked backstage a little bit about this, but the fixation on their interest rate I'll give you an example. This one hit really close to home because I had some folks who bought a house. December was 2 years ago.
Okay.
And they realized they love the house. But the wife she's very animated. So she said, I feel like when if I'm outside talking on the phone, all my neighbors can hear what I'm saying. And I said, so you like the house, but maybe you want some more space. Maybe you need some more land. So
yeah,
they wanted to kind of start looking for that land and maybe an opportunity to build. And I provided them some really good options. I told them so this would have been prior to, this was like summer of last year we had this conversation. I told them, I said, well, right now you've got, after I calculate my fees and your deed stamps and the kind of fees that a seller would have. I don't think her family wants her to do that either necessarily. She's just loud, but she needs an
ADU, and then she needs to take a HELOC out, build an ADU, and just talk there. Yeah,
right,
and then everyone's happy, right? Yeah.
So they, when they bought, they got a good rate, and that's what they were fixated on, was that it was like, I said, well, by the time we calculate everything, your net is going to be about $80,000, and you haven't even lived in the house for 2 years yet. And they said, okay, well, we've got some family meeting, we got some things to talk about. And I
Mhm.
followed up with them a couple of days later, and their response was that I really like my rate. And I was like, did you hear the part where I said you've got $80,000, you earned 80, you've got $80,000 in equity in a year and a half.
Mhm.
And it's that mindset of stay so fixated on the rate that
Mhm.
you can't see that, your opportunity in such a short period of time. You've really done well, and you don't have an asset that's produced like that.
Mhm.
Um so so I think a lot of people think that same way, that um fixate on the rate and not think about what their investment up to that point has created for, has provided them.
Mhm.
Um, and that's why when the interest rate started going up, a lot of my conversations were just talking about that stuff, and letting people know, like, hey, what is talking to lenders and saying, hey, what's the difference? If they bought the same house now, what would their payment be? And calculate, like, hey, if yeah, that's you're buying a house, a more expensive house, but you're putting $80,000 down on it. You're basically upgrading with more
Mhm.
space,
Right?
and your
Mhm.
your your rates, your payment is not going to be that different because of that down payment. So
Mhm.
just having those conversations, and getting in front of people, and just making sure they see the whole picture and not just fixate on that one piece of the puzzle.
Yeah, and I think, I mean, just, listen to you talk about it, like, I'm, like, nodding my head and, like, um, I'm sure you have a lot of patience with your clients. I definitely do. It's not like it's more of like a, how do I make this make sense to someone and not sound like I'm trying to convince you, but rather like just give you like the the tools to understand exactly what is the best scenario for you. Like with the client today, I said like, well, I asked the guy, I was like, I go, I'm just gonna be straight up with you, man. Like, are you okay with having a room that is, connected to, or like that's across from your bedroom with your wife or whatever, that's across from your mother-in-law, for whatever reason, they're not young, they're not like super young, but like, just like the privacy thing, right? That's just the culture here, right? And he's like, oh, she's really nice and sweet. I would want more privacy for her. And so I was like, okay, does that mean like you need a completely different area, or do you need a bigger house, or like what is it? And their thing is like, it's like well, what he said, I I like our house. We have enough of a big enough backyard, and I just don't know about the rate. And so I go, is it the rate or is it the price or the cost of doing it? And he's like, I guess it's the cost. And so I was like, okay, well, if you go with the HELOC and keep the rate on your first, you have two separate mortgages, so that's two different payments you have to worry about per month. The actual payment of each loan is about, $120 or so less than if you were to do a just straight up cash out refi. However, it sounds like you're concerned, because I'm listening to him talk about uh the interest only kind of portion of the HELOC, and uh you're not confident that you'll qualify anyway. So this is all conversations we're having before he actually applies. Sure enough, we have a little bit of work to do with his credit and all that. So it's all about like options. So now he had three options initially. Now he only has two. Um, and I think that's what people should also look about too. Not just with like housing or like stocks, but like with your comic books that you buy. Um, I think there was two FOC books out this week. I'm bringing it back to comics again. It's like Godfather 3, right? With Michael, and he's like, they bring me back in, you know what I mean? But this just to make it make sense from a money standpoint. There was two FOC books this week that, were like the big talk or whatever. And it was the Spider Boy second appearance, right? And then there was like a potential new female Star Wars character. And I thought to myself, I only want to get one. and I want to get it for the right reasons. And I was like, I'm going to go get the Star Wars book because that seems like a more interesting type of, scenario, quote unquote, for me. And I only had like $10 in my pocket or whatever. I think people should take that in consideration now versus like back in the day, like, a year ago, you could buy both appearances and then not
You
only
might get
you,
five. You might get 5 of each,
yeah,
or 10 of each, or
exactly,
whatever.
right. I think Wade, kind of going back to your everyday type of American consumer, get all the options that you can. And if you're working with a real estate agent or a mortgage broker that's only going to give you 2 of the 4, go to someone else. Consumers have the power. They really do. They may not have the pricing power, but I was on the phone for this lady with this couple for 3 hours, and it's not a big loan, but I mean, I think of the long-term kind of relationship I'm going to have with these clients, and potentially, and how it is in real estate, it's all about referral, man. I guarantee you, if like you have a client that says like, the realtor I work with won't get back on my calls, or like won't answer these questions, or just doesn't seem whatever, but I like you because you're patient with me, you have a good voice, and you make things you don't make me feel so inferior when I'm trying to go through the process. And all that stuff on TikTok doesn't make any sense to me either. So anyway, but yeah, in general with this slide, yeah, super easy to dip. Have you read real estate contracts? I personally haven't, man. And again, it's a trust thing too. Like, you're trusting me to explain how interest rates and mortgages work. And I always offer that up, and I always say like, but I'm never gonna know like the exact, like, or I'm not gonna know how you feel about your loan in 5 years, but this is how it is today. And I'm assuming with you, like when someone signs a contract to work with you, I'm sure and they're not going to look at like the fine print. They're just going to trust you. And that's a big thing too. Trust. I think a lot of in finance in general and real estate, when it comes to money, like, it's the trust factor. And I think that's, if you go back to slide 1 and 2, it's the trust factor with the American consumer has been lost. And that's why these bank stocks are failing lately, is because people just don't trust. You know what I mean?
Yep.
So
We're definitely in a relationship business, and I had this conversation with one of my buyers, which was a referral from my cousin is an engineer, and the company he works for, he's referred 4 people to me so far from his company. And yeah, the best screen name in the business.
it really is, dude. Like,
It's
oh man, it's funny because like I think he's on Instagram, but like I always see Obi-Wan Kamblomi come through like on the chat, and like I don't know who he's on. I don't know exactly who he is on Instagram, or maybe we don't interact that much. But yeah, honestly, it's like one of the best names.
absolutely. So
Yeah.
so having these conversations, we were in a house, and I said, look, it's got to be right for you. This I don't I'm not a salesman type real estate
Mm-hmm.
agent.
Mm-hmm.
I'm not in it for the trend. This isn't a paycheck. To tell people this isn't a paycheck for me. We're going to build a oh, okay. All right. Well, now that I never even realized that. I just saw his comment.
Just change it all to Obi-Wan Kamblomi, like, please.
Yeah, I mean, Darth
That's the
Evans.
best.
Yeah,
That's the
Darth
best one
Evans.
ever.
It's a lot less. Yeah, that's interesting. I had no idea. Yeah, the man of mystery.
Seriously.
But I said, we will have a relationship after this transaction. You're not a number. You're not a paycheck for me.
Yeah.
So we will keep in touch, and so that just eases. When we scale things back and realize like we're helping someone make the largest purchase of their lives,
Mm-hmm.
and
Mm-hmm.
and they, for them to, I'm honored that people would enlist me to help them do that
Yeah.
and guide them along the way. And but I'm not trying to, if it takes, somebody, what's up, man? If it takes somebody, I've got a lady in Alabama who's looking to relocate here because she has family, and I've been talking to her for over a year. And she's got some, she's got some very specific needs, and it's just, hey, it's she said, is it normal for it to take this long? And I said, well, every transaction is different. And what is normal for you is, some people walk into it and they know immediately, and other people have to get, you got to walk in,
Yeah.
6 or 8 or 10 houses
Sure.
to feel like you can make a decision.
Mhm.
I usually tell folks, look, you count what you see online. I mean, there's the consumer for what I do in real estate now is so much more educated than they were probably when I started, 10 years next month.
Wow.
But there's
Congrats,
so
man.
much more. Yeah, thank you. There's so much more educated now because there's more information at their fingertips.
Yeah. Yeah.
So count, we rule out viewing a house now because you saw it online and there's a feature that didn't work for you. So
Mhm.
we can count that, but every transaction is different. We're in the relationship business, and
100%. Mhm.
yeah, I'm sure you're the same way. Nothing is better than somebody having such a good experience with me that they would send somebody that they care about to have me work with them.
Yeah.
That's just the bottom line for me. And that's the type. I don't pay for leads on Zillow or any of that kind of stuff. Mine is relationship based, and
Mhm.
it's success with past clients who refer people that they care about to me to work with them in the future. So that's a big part of it, is just having somebody you trust, and having somebody who will guide you and not steer you wrong, because they know they're going to have a relationship with you in the future.
Yeah, and that's cool. You talk about relocating and kind of some good stuff I want to talk, or you want to talk about. So I'm gonna pass the baton a little bit, but one of the I think one key thing that all Americans should look at is unemployment. You should look at that barometer. It's every Friday at the beginning of the month, so we're gonna get unemployment numbers Friday. Just look at it. Just make sure that it's, if it's at 4%, that's healthy for the country. That's one kind of index you can look at. And the reason I bring that up is because South Carolina is really growing. I've read about it. Boeing moved to South Carolina quite a bit ago, and my cousins in Jersey actually talked about South Carolina very adamantly. Or yeah, they just had very good things to say about South Carolina. It's pretty close. It's on the East Coast. You guys have beaches. It seems like the real estate's very, very well priced, and but again, more importantly, we got some good news out of North Carolina here, or South Carolina. Sorry, I didn't mean to mess that up. Sorry.
That's all right. So so it is connected, but I thought this was really interesting. So there are, I think both of these companies that are represented in this article are Charlotte-based companies, and they're building two separate companies are building facilities in South Carolina. So yeah, there's the first $1.3 billion facility in Chester County, which is 40 miles south of Charlotte. So
Mm.
if you look at South Carolina, it's a big triangle, and
Mm-hmm.
that's sitting on its point, basically.
Mm-hmm.
And Columbia, where I live, is right in the middle. So our big claim to fame is that we're about an hour and a half to Charleston, which is on the coast. Very
Mm-hmm.
historic city, very beautiful city. Charleston also it's the 8th largest port in the United States.
I did not
So
know that.
yeah,
Huh.
so there's a lot. I actually read that. It's in one of these articles that I sent you for this presentation.
Okay.
And that was really interesting to hear. So the trucking industry here is huge.
I bet.
So coming out of the port city in Charleston. We got us a Hilton Head Islander in the chat
Oh,
there.
okay.
So yeah, cool, man. That's a great city too, man. Hilton Head is beautiful. That's actually where the Heritage is played. If you at the weekend after the Masters is the Heritage.
Mm-hmm.
Um, so they're investing in two facilities here that will. I think both of these companies, their plan is to harvest lithium in in expired batteries for electric cars and
Wow.
refurbish them for new car batteries.
Okay.
So that, because that's always the big concern that comes up, is that, well, what do you do with the batteries after they're, they don't last forever? What do you do? Well, it looks like there are companies out there who are considering this and starting to oh, that's cool, man. Very cool. Well, hit me up next time you're in the area.
Yeah.
I'll take you around and do some stuff. But and I told Ferd, I've already told Ferd, if you ever come here, man, I would love for you to. I always take people by like our college stadium because they're
Yeah.
kind of
Heck yeah.
surprised to see what it's like. And then the college baseball team is doing pretty well now too.
Oh,
But
oh, sorry. Are you near Clemson?
so that's like 2 hours. It's in the
Hmm.
northeast part of the state. Yeah,
Okay.
that's our bitter rival.
And where? What's the rival
University of
to?
South Carolina, the
Oh,
Gamecocks.
Gamecocks. Yeah, yeah,
Yeah,
yeah.
yeah.
It's funny. That was a very popular hat here in Washington,
I,
back in high school.
I can
Like in
imagine. Yeah,
Yeah, yeah.
there's an abbreviated mascot. Yeah, the abbreviated name of the mascot. Yeah.
That was like
Um,
my favorite hat to wear. Carry on. Sorry.
so so I thought this was interesting that they're building. So one facility is in Chester, then there's another that is in Columbia at an office park in Columbia, so closer to where I live. Um, from Columbia, I-77 runs straight up into Charlotte. Charlotte's almost due north of us by about an hour and a half due north,
Hmm.
and so you start seeing the connecting the dots here, these trade routes and stuff. Yeah, yeah, yeah. That's the other thing to figure out. So one of the things we're trying to our Henry McMaster, our governor, has started. So he did some incentives for these companies to move here. So that article is related to this article, which Volkswagen backed Scout Motors is building a $2 billion facility in Blythewood, South Carolina, which is it's a 15 to 20 miles north of Columbia.
Hmm.
And what did it say? It was like 1,600 acres or something that they're building this $2 billion facility, capable of producing 200 EVs a year in South Carolina. They're actually breaking ground on that. It's supposed to be this summer, fall of this year.
Hmm.
But Governor McMaster actually did an executive order to sign in October of last year that prioritizes the building of those automobiles here, and they're moving forward with it. But that's a huge thing. And they said employ 4,000 people, 1,600 acres, and the facility itself will occupy 1,100 acres of that property. So
And I gotta imagine the 4,000 people are going to work there, but the people that are building the facility, that's going to employ people as well, correct?
right,
Yeah,
yeah,
just assuming,
yeah.
but
Yeah, so you figure one of the listings I took is in Blythewood, South Carolina. So the one I
Hmm.
took 2 weeks ago, and so it should be a really nice influx of of people there. But they're backed by Volkswagen. Once that facility, they wanted to bring everything in house. They explored the option of, okay, do we lease a building? Do we sub out the building of these yeah, it's a lot of that's going on right now too. There's where a lot of our interstates and highways are it's you complain about the shape of the roads, and then you complain when they're closed lanes so that they can repair the roads. But
yeah.
there's a lot of that stuff going on here right now. So that's why this was so us doing this was so important to me to see. There's a lot of bad news. This is very centralized. This is regional, but
Hmm.
there's also a lot of good things that are going on. And I think this mindset, I don't know if it ultimately falls on the the individual governments of the states to create these opportunities and have have these opportunities, make these opportunities available, but really think outside the box and think about what you can do to create some positive growth in your state. So I was excited to this story broke in March, so it was just a little
Wow.
over a month ago, and yeah, it said in like second quarter, third quarter of 2023, they're actually breaking ground on it. So it
Yeah.
was some positive news with all the other stuff that we were talking about. We're Columbia, where I live, we're a college town, University of South Carolina. There's
Yeah.
also a number of smaller colleges. We've probably got half a dozen other smaller colleges in the area. But we're also a military base town. So Fort
I knew that.
Jackson, yeah,
I didn't
Fort
know that.
Jackson military base is here. So there's a ton of opportunity.
I read about that too, James. That's
Yeah,
good stuff.
yeah. Dude, I'm glad you're in the chat, man. This is we got yeah, we've with the chat has really come through with some solid information tonight. I appreciate you guys joining us.
Yeah.
Um
100%.
so that creates opportunities for us
Mhm.
here that might be a little bit different than in some places. I mean, we do have like a regional Amazon facility here as well, a distribution center,
Sure.
and uh, you mentioned Boeing, BMW also came years back. They
Mhm.
built a facility here in Greenville area, which is up near Clemson.
Mhm.
So there's some opportunities here for sure, and that I would anticipate that that would benefit me to some degree. Those 4,000 people have to have somewhere to live, and I'm sure they're
Right.
not drawing completely from probably pulling in people from all over the country to work, to work in these facilities, different experts. And they even talked about having the university here, getting to draw on young talent. They
Oh,
want to be
yeah.
a young company that's bringing in these engineers who can work in these facilities and stuff. So we didn't want to close. We didn't want everybody to you know to end the our podcast on a just wanted to end it on a positive note, with some good news and some growth and some other opportunity. The other thing it's created here, I'm working probably with more investor clients now than I have in my previous. I've been doing this for 10 years, and this within
Mhm.
the last probably less than a year, 9 months maybe, I've had a lot more conversations with investors, people looking to, because here's the thing, with the price of homes here, it's considerably lower. I mean, we rarely have people move here. I helped a lady move here. She was in her 70s and lived in an apartment in Brooklyn.
Oh
And
gosh.
she saw my listing online, called me up, didn't have a great experience with her realtor. And so I ended up working with her. And but she had lived in an apartment her whole life, and to be able to move into a really nice brick house here, and just couldn't believe like what you could buy a house for here,
Sure.
very reasonable.
Yeah.
So yeah, those opportunities I think will continue to be out there. But um having folks, if somebody wanted to diversify their portfolio by investing in real estate, all that stuff can be done. I mean, a lot of military folks do that when they
Mhm.
move from state to state. Whatever house they bought becomes a rental, and they move to another place and have someone manage that property. So those are opportunities that exist here,
Yeah.
um, as well. So there's a there's a lot of positive stuff, but like I said, the reason I wanted to do this was I'm immersed in the bubble that I'm in. I'm immersed in the market that I'm in,
Me
and
too.
same with you. So
Yeah.
having these conversations, having the chat step in and kind of let us know what's going on with them, it's it's cool to have these conversations.
Yeah, and I work with other brokers too. So I work for a bank. I'm not gonna say which bank I work for, but I'm based in Washington, Seattle area, and a lot of we're not really we only operate in 9 different states on the West Coast and in Colorado. We're not in Texas, so I can't do loans in Texas, but I do have like some friends at Wells Fargo, or not Wells Fargo, they're not Wells Fargo anymore. At other banks that do lend to other 50 states. And so I kind of partner with them. Like if I get a call from someone in say like New York or um, enter like, state or whatever, I'll be like, oh, I don't work with we can't do loans there, but I have a friend that works at, this other bank. And then, his bank, his particular brokers, they don't do HELOCs. And so like he sends me all his HELOC leads like all the time. And a big trend here too is like you have a client who is maybe nearing retirement or has like their $1 million house paid off that they paid 250 for it in 1960 or whatever. You can get a HELOC on your primary home. And there's no closing costs for it, no whatever. And let's say you want to buy a vacation home in South Carolina, or you want to get up and move. However, you have to either sell your home or get equity from the house. Well, a HELOC is like the best way to do that because it's really cheap, meaning there's no closing costs because we pay for all the closing costs. And it's essentially like cash. So you don't have to worry about getting approved for a loan or having to deal with a 30-day close. You're like, hey, I got a check for 250 or 300 grand. Let me buy that condo over on the East Coast, and everyone's like happy, right? So there's other ways to
plan your vacations.
Exactly, right? Yeah. And so you can so there's other ways to finance, properties and again, that's like a scenario where they're not rate sensitive. They don't give a crap about the rates. They give a crap about I wanted this lifestyle because I have control. And I think that's the kind of piggyback earlier to the ADU person. Like, other thing too, when you're applying for a home, just because your credit isn't great doesn't mean you cannot qualify. You can always there's other programs. It's just kind of up to you. I think in some cases, and kind of piggyback on what Brad said earlier. Like, so we want to kind of end this on a good note, or just kind of, I would say, like, at least on like what I thought of just kind of suggestions either to what to look out for or how to control your money or like your financial status. And again, everyone's kind of different, so it depends on what your goals are. Do you want to buy a home for your family? So if that's the case, like you have a little bit of money put away, or you don't have any money put away, but you make good money and your credit's pretty good. And you're going from a family of 4 to a family of 3 and possibly 4 or whatever, 2 to 3 to 4, and it's happening fairly quickly. You probably need to buy a home, and you need to put yourself in that market. You may not find one right away, but like, pre-qualify, see what you qualify for. And not to say don't care about the rate, but don't worry about it and just kind of see what the actual reality of that rate is with a $500,000 loan.
Like you said earlier, don't like maybe focus more on.
You said, can you please call him Southpaw? It's confusing.
Sorry. But what's your payment?
Yeah.
The interest rate is, and something you said that I think is really key that I wanted to highlight while I was thinking about it. And you said it earlier. You mentioned that those people, you spent 3 hours on the phone with them and they had some work to do. But here's the thing. You're pointing them in the right direction. Like you're not just focused. They're not a paycheck for you either. Like you're helping them get to the point. You're helping them realize that dream, and that's very commendable because a big company who handles mortgage loans, they've got they might have a stack of them. And if you don't qualify, then you go to the reject pile and then move on to the next one. But it's the people who are willing to like, hey, you're not there, but if you'll listen to me, I can help you get there.
Mm-hmm.
And that's where if you've got questions, connect with someone who can point you in the right direction and who's
Mhm.
going to work with you to get there. Because there nothing feels sweeter than to be at the closing table with somebody who, hey, you remember,
Heck
you know,
yeah.
a year ago when it looked like this wasn't going to happen, and here we are, and you're getting ready to sign your
Hell
document.
yeah.
I
Yeah,
mean, it's
100.
just like nothing feels better than that.
Yeah. I think we have the most, I mean, at least for like the mortgage side, we have like kind of like, I would say like, it's a tough job because you have to tell people reality, right? But at the same time, we have the opportunity to provide value to our clients, and the value that, like you're kind of saying, not trying to tout my own horn or anything like that, but like I love the challenge of someone not feeling so great about the mortgage process in the beginning, and then in the end they were like, oh my gosh, I feel so accomplished. And then it's like a domino effect. Like, you got your house in order, and now you can save up to, buy new furniture, or you're going to qualify for all this other stuff. Don't do it right away, but know that you took care of the hardest thing ever that anyone's ever going to come through in their life financially, right? Buying a house. And the other thing too for like you, Brad, is like, people always talk about what should I invest my money in, and what is the easiest way to accumulate wealth, and it's really home ownership. I don't think anything really beats that, like on a consistent basis. Obviously, you take 2008, 2009 out of the equation, but like, it's it's the easiest way to, I mean, you live in the home, so you get that unmonetary like value out of it. And then, like what's the one thing people don't want to give up? It's either their pets or their house. Like I talked to like 90-year-old like couple or like person, and they're like, I live in this 4-bedroom house. It's too big for me, but I have too many memories out of it. So there's that priceless kind of like value to it. Um, and yeah, and I think both of us want to provide value to our clients, whether they be that 22-year-old tech guy that just signed a $100,000 bonus with XYZ tech company, or the 80-year-old lady in Brooklyn that never had a house more than 800 square feet and had a backyard. It's experiences as well. So
Yeah,
let's
she's got a brick house with what's up, man? And so sorry for the confusion, Brad. I just picture Brad Selden like every time you called me Brad, him looking up or like you're addressing
I
him
know.
directly or something.
Brad.
But
You know what I mean? Uh,
but yes, now she's got a brick house with a
mhm,
two-car garage and
mhm,
a beautiful open. It's just like a screened-in back porch, and I mean, it's just.
mhm.
And I still have not met her in person.
Yeah,
I
it's crazy. Yeah.
I still haven't met her in person, but we had a great conversation and we connected, and I met her niece who lives here. She did the walkthrough. We did a video walkthrough, and it's just, yeah, it's a good feeling to be able to do that, and it makes you look like a rock star. But they also have that sense of they had to sacrifice something to do the things that you're requesting they do to get to meet this goal. And yeah, it's a great feeling, man. For as tough as our jobs are, I think that's so rewarding to get to that point.
Yeah, especially again, like if it's a client that just came in like kind of head down, and you're like, no, like this is let me cook, let me do my job, and stuff like that. So
And Brad, she actually talked to the neighbors, and she's going to
and
use
got them like,
their landscapers. So
there you go.
we got her covered
See?
all over the place.
Um But yeah, so options for people. I just, we're in uncertain times, and kind of what I was saying earlier. Like, I'm a limit like kind of my expenditure, my expenditures quite a bit. I'm getting married in a couple months too, so there's that as well. Um, and but like at the same time, like if you are in control of your assets, you really have goals to like buy a home. Just see what the worst you could do is just ask someone and just be like, hey, I make this much money. Can I make application? Just see where I'm at. And I'm like, yeah. Or you can just ask general questions of like, I just don't think I can qualify. And you would be shocked, probably like 70% of the time, of those people that have that idea in their head because they watch CNBC or MSNBC, Fox, whatever it is. They actually do qualify. You just never know until you try. And I always encourage people to at least just look. I've I've sent so many estimates to people that never made application with me because I want them to know what it looks like. And 80% of those people have been like, oh, thanks for doing this, but I don't think I can afford that. But at least they know, or like they have an idea of like what it would take to get to that point. I'm not necessarily like hoping that they remember that estimate I sent them like 2 years ago, but at least I can have some value of like, oh, I took 10, 30 seconds out of my day to like send an estimate to someone who could potentially change their life later down the road. Um,
Yeah,
and
don't assume, and don't be ashamed, like,
mhm,
oh, I don't think my credit's that good. I don't want anybody to see what, it's that situation. You're accustomed to dealing with that. I'm accustomed to dealing with that. We've got that fiduciary duty where it's not something we discuss at the dinner table,
mhm.
it's confidential, and just find out, do yourself a favor, and just find out where things sit. If you don't make the move, like you're saying, I mean, it's good to just know,
Mhm.
you know, at least Ferd thinks I can afford X amount payment on, mortgage payment or whatever. But it's good to know. I mean, have some idea where things sit.
And I think also like with you like doing a showing or like doing an open house or whatever, like I go to open houses like just for fun. Like I mean, I have my house already, so I'm good. But like um and I think realtors like they don't care if you just go into open. They're gonna be like, "Are you gonna buy this house?" Like some do. I mean, I think those are just rookie. Like, sorry,
I
I think
think
those
it's
are just
something like less than 1% of houses are sold at open houses.
right. And so, like, if you want to get an idea of what kind of house you like, even if you're not pre-qualified or just want to just check out someone else's house, like, do it. There's no, I think the perception, I think a lot of people, at least here in like Seattle or whatever, um, we're so like, oh, I'm like, and it's just own insecurity, right? But man, like if I was a realtor, and I know realtors that I do work with, like they don't care that that's a potential customer 2 years down the line. You know what I mean? Or engagement with the customer. Because I'm assuming like open houses for you, I'm assuming are just like kind of boring because you just sit there and wait, right?
I did one Sunday for that house
Hmm.
in Blythewood. So it's 3,400 square feet, a 2-bay, 3-car garage,
Hmm.
5 bedrooms, 4.5 baths, and it's got 3 suites. So there's an in-law suite downstairs with a bathroom and everything, its own private bathroom. The master, of course, and then one of the bedrooms upstairs has one, and then it's got this huge media room,
Hmm.
covered back porch, really nice. And I had 3 people. I had 3 couples. We had really bad weather on Sunday, but it's one of those things for me where um, you want your client to see that you're putting forth an effort to do whatever it takes to, and it gives me one more opportunity to promote it on social media or whatever. Hey,
Sure.
there's an open house.
Hmm.
So three couples came in. One couple is from Colombia, and they have 6 kids. So they're living in like a 3-bedroom right now. So as their kids get older, you can get away with that when you've got really young kids, but as they get older, it's more
Sure.
difficult. The other 2 people, one guy was renting here while his wife was in North Dakota trying to sell their house up there. And he said it just started thawing up there. So in North Dakota.
Hmm.
So and then the other couple had driven down for the weekend 9 hours to come look at houses in Columbia because the husband's relocating.
Mm.
So you meet some interesting people, and maybe
Sure.
there's an opportunity that I can work with them. If that house didn't work, the benefit for me is meeting potential buyers who aren't working with an agent. So,
Hmm.
but yeah, it can be, if you don't have any people coming through, it can be a little boring.
Yeah. So see there, right there. I mean, like you guys have open houses, and like I know some people in the chat are like, houses are pretty expensive, Mountain View or whatever. You don't know what your life's going to be like, 2, 3 years down the road. You could end up moving from Mountain View to like South Carolina, for example, or um, and especially nowadays with like remote work, it's like people are moving out of the bigger cities just because it's unaffordable and they don't want to live like that, or they just love living there. It is what it is. Everyone, again, kind of picking back the last slide, everyone's situation is different. But just know that you have options and just like, check it out and educate yourself and all that. I kind of added this slide just as kind of like a thing to kind of look at. So I work in mortgages. I'm a loan officer by trade. I am obsessed with anything that has to do with money movement and companies. I love the transfer of how a dollar gets from someone's pocket to a company. I just love that whole transactional process. It's pretty boring to other people, but people always ask me like, "Oh, what stock should I look out for?" Just like, what do you think is a good investment? And I'm not saying buy these companies. I just feel like right now these are like the most certain companies to me in today's kind of environment. And the commonality with these kind of products or these companies is value added. And I think Brad and myself, we add value, I would say, to our jobs. And I think nowadays that people are being more picky in our comic book buying. Like, we as readers or consumers of comic books, we want value out of the stuff that we buy, because that 4.99, $5.99 comic book, it's it's just paper. But if it adds value to like whatever we're trying to find value in, it's worth more than that 4.99 that it's going for. Um, I picked Apple. It has earnings reports coming out tomorrow. This company is what they would call, I would say, in modern comic book terms, this is the ultimate Fallout 4 of any of the companies in the world. Meaning, if this company's doing bad, you should be worried, because everybody has an Apple, or it has the most cash on the books. It pays a dividend. It's a really well structured company. They're very smart with their money. This is kind of an interesting fact. Can you guess how many people Apple hired during the COVID tech boom of 2020 to 2022?
I think you mentioned this on some other podcast or something.
I probably did.
I think you did, but I can't remember what you said. But I'm curious. Go ahead.
It was 0. They didn't hire a single person, because I don't know what they did, but they're just smart. They're a smart company. When every other company was increasing staff because of work from home and accommodating for that, I think they were just like, we don't need to do that, because they know it's temporary. I don't know what it was, but that's assuming that's the smartest company in the world. Apple, think different, right? And I mean, that's just a testament to just being such a smart company.
Didn't you say they just did like was it a savings account or so, or what, some kind, they just did some kind of.
Yeah. So if you are Apple Card, and I'm not trying to promote this at all, but if you are Apple Card holder, you can open up a savings account. It's partnered with It's partnered with Goldman Sachs, and I'll kind of piggyback this on what you can do with your money now. They're offering like a 4% rate. So if you're out there and you have like money, you don't know what, you're kind of afraid to put it in like equities or stocks, and it's under 250K. I would say just Google online and like look for lenders that are paying 4%. I mean, that's a good rate. I have a Marcus.com account. They pay around 4%. It's liquid, so it's not like a CD where you have to like buy a term for it. You can get 4% back after 1 month and then pull your money out. There's no minimum to put in. If you guys want a referral link, I can give you a referral link. I think the minimum is like $100, but you get an extra like 0.5% for like 3 months as a kind of an introductory like thank you, and as long as the person that refers you as well. So like if you get 4% initially, you'll get 4.5% for 3 months. That's pretty. I mean, 0.5% on any $100. I mean, do it for yourself, do it for your kids, that kind of thing. Nintendo, I mentioned, just because it's one of those companies that just puts out great. It's not gonna like make it a ton of money, but I think they pay a dividend as well. It's not the sexiest stock, but I thought it was really good as well. Alta is kind of an interesting one. Do you guys have a lot of Altas in South Carolina?
Yeah, we do.
I've always known them as kind of I guess the Costco of makeup. I know a lot of makeup artists that go there because of the point system they have, and the amount of valued like products that they sell at a discount because you're a member. And I mean, with the onset of just like not work from home, but like YouTube and just like very face fronting type of like, meetings that people have, like makeup and making yourself look good is going to be always in demand. And Ulta is a very well run company. They're in areas all over, I would say, the US, and the management's very smart with their money. I don't think they pay a dividend, but it's one of those growth stocks that always just kind of keeps consistent. And then Costco. I mean, Costco's based out of Kirkland, Washington, which is on the east side of Seattle. When is that place never busy? You know what I
Yeah.
mean? I mean, it's insane. The other thing too about Costco is it's also a nice barometer to see if inflation is actually kind of chirping down a little bit, and it's a good indicator of the well versed consumer because a lot of families shop at Costco obviously because of the vast amount of stuff. Um, and Costco always does a really good job of like price controls and all that. So, um, excuse me, those are just some ideas of companies maybe to look out for if you're curious of investing. If you have an extra like 10 grand, just kind of you don't really know what to do with it and you want to just kind of take nibbles at the market. I don't think these are bad companies to at least take a look at and maybe not put all of your cards in one pot, but definitely just keep an eye out for them. We are coming in at earnings season, like I've said on my market reports and all that. But yeah, just some interesting stuff to take a look at. I'm not personally invested in any of these. I will always tell you guys if I'm not. Well, actually, I have shares of Apple. Never mind. But I'm not invested in any of these other companies. Are you invested at all in these companies? Like,
I am not. No, I don't feel educated enough to do this. So this was intriguing. This was good to hear.
cool. Yeah, I mean, I'll try and do these segments at the end of our shows or just like in between and all that. But I think that's pretty much all we have today. Unless you have anything else to add to for the good of the order.
Well, this definitely exceeded our expectations because we
Yeah.
thought there wouldn't be anybody in the chat, and not only did we have a great turnout, but I mean they were like an extension of the panel,
Yeah.
providing great information, and really, I appreciate you guys very much. Thank you for stepping up and hanging out with us tonight.
Yeah, and this is just kind of like a test on my normal channel. We are gonna try and create a new channel. I put or let me put the Instagram up, but hold on, let me just double check if it's there. Ooh, okay, so I started doing this Instagram just for Brad and myself to kind of deviate away from like our comic book personalities or whatever. But it's called Sunset to South, and the concept came about because obviously I'm on the West Coast and Brad's on in South Carolina. Sunset's my favorite avenue in Edmonds, the city that I live in and I grew up in. But so that's kind of the concept of our channel. I'll do market updates here and kind of highlight small businesses and kind of DIY stuff that we're doing. So stuff associated with your home or just ways to like kind of save on like anything really. It's going to be really money oriented, or I can't talk right now. But yeah, if you guys would give this a follow, I'd really appreciate it, and just tell everybody all that. We will eventually be doing a Sunset to the South YouTube channel, and hopefully OTR's Discord will help us out with that, and we'll get that channel going. Honestly, like I just want to get the information out there, and I think Brad does too. We want to provide that value to everybody in this, and I think the also kind of the talk about today was like it was really good to know how like you felt about it, and because like I'll be honest, I'm kind of scared about it. It is scary, but it's what site is that? It's an Instagram. It's an Instagram. Here, let me see if I can put it in the chat. But it's our Instagram. Our new Instagram account on Instagram. But no, it's nice to know that I think during the pandemic, a lot of tech companies did very, very well, and they put their money into these banks and kind of increased the market cap of these banks. And initially, it was a really good idea, but now I think that I just think that it was kind of a bad move, personally on those boards. And like I would be, I would I hate the fact that those boards like First Republic or not First Republic, but SVB, the boards got payouts like in the hundreds of millions, and these people are losing jobs and people are losing money, and it's not really fair. But I hopefully in the future, I'm not a political person at all, but I was watching Elizabeth Warren, and she was stating that we need to not allow we need to regulate those type of like payouts. It's just not fair to the American people. And the public's pissed. They're like, why should I bail out these banks that made stupid decisions just because it's like the whole too big to fail thing. And kind of a talk, which I think is what's really going to have to happen to really just flame out the flames of kind of the scariness of or the scared public in general is the Fed just needs to guarantee deposits for the next like 6 months. Doesn't have to be like forever, but like they really just need to, because I mean the Fed and the Treasury, I mean, you guys are responsible for this. You may not be the main like antagonist of this whole thing, but like you definitely are the ones that need to figure this out. You guys are the smartest people financially in the world, supposedly. Um, yeah, it's definitely a crisis. And then we have the to get political, we have the looming debt ceiling coming up in June. So Congress and the Senate need to figure that out too. That's as political as I'm going to get. I'm not going to say one way or the other, but it's some concerns I think that are definitely going to affect myself and Brad. Do you agree?
Oh yeah, absolutely. Yeah. And it's interesting, like a lot of the conversation we've had tonight is about how to, maybe leaning up your budget as a household. And maybe if we as a country could do that and kind of be a little more mindful of that, and it might not be a bad thing for us all to do, is just like get lean
Yeah.
and
Yeah.
get rid of things that we don't necessarily need. And
Yeah.
I'm the same as you, man. I've done a lot more YouTube, and I cut the cord on stuff that I'd cut the cord. I mean, like
Mhm.
a lot of that stuff was on the chopping block. So
Mhm.
there my entertain. Don't pay for things that are no longer entertaining you.
Right.
And you start making cuts here, here and there. Yeah, it's you'll see a difference.
Yeah, definitely. Um, all right. Well, that was a really fun show. I remember the first time we had a show. We probably talked for about like an hour afterwards, talking about what we're doing today. And so I'm glad we kind of broke bread with this topic. And I think wasn't a ton of people watching, but it was. I mean, it could have been 4 people, and it felt like 50. So I'm hoping we provide value to your guys' financial situations. We're going to come up with more topics to talk about, and again, we'll try to move it to this Sunset to South channel. I just got to get on my ass and create that whole thing, and yeah, just look out for some more updates from us, and let everybody know, like, subscribe, all that good stuff to this channel. I'll be doing a show on Thursday. Brad, do you have anything coming up anytime soon?
I need to do I've got some recent pickups I need to share at some point. And but with work, man, it's been so crazy. Like that's
Sure.
got that has to dominate what I'm,
Exactly.
my time right now. But it is fun and it is therapeutic to do that stuff. So I've got some things I need to share that are sitting in a pile over here. So hopefully, I'm hoping like Friday, but maybe this weekend for sure. Hopefully
Okay.
Friday.
Cool. Yeah, no, me and Pickles will be doing a show on Sunday. Our topic this week's gonna be about kind of something fun we're gonna do. I'm gonna look at the 2022 market to today, and then we're gonna look at some trade paperbacks that some of the people in the chat have requested. And so yeah, hopefully you'll be able to tune in. I'll keep a lookout for your show for sure. But other than that, we'll
That's actually what I've been buying a lot of. Is I'm going
trade
back
paperbacks.
and reading old. Yeah, I
Hmm.
bought four four issues. I'm on, I think, the third right now of the Joss Whedon Astonishing X-Men run.
Oh, that's a great series, man.
Yeah, I've
Yeah.
I've really been enjoying that. But I missed all that because I wasn't collecting then. So
Yeah.
yeah, I'm going back, and so yeah, I'm looking forward to that because the recommendations. I'll tell you one that you told me that's been tough is it's impossible for us to do this and not talk about comics,
I
but
know. No, no,
but
go for it. No, it's good.
you can't find the Century trade paperbacks. Like they're
Yeah.
really hard to find. They haven't been printed in so long, and that's one because you've talked about it so much recently. That's
I'm
one
talking
that
I'll talk about that on, on Sunday. It's one
I've
of my favorite. I
okay.
have the whole series. We're also gonna talk about like subscribing to like online and stuff too. That might be the way to do it anyway. we'll try and show it. I don't know if Jason will be able to have the capability to show how he reads it on there, but yeah, it should be a fun show. We're pretty excited about it. I think we'll have a good time. So anyway, well, I've taken enough time of yours and everyone else's. Yeah, we'll keep everybody updated until until we get the YouTube show going with Sunset to South. But yeah, again, thanks everybody for joining, and we'll see you next time.
Thanks, guys.